Trading is often portrayed as an easy way to quickly make money, but the reality is that over 90% of traders end up losing money. But I have some good news for you. By avoiding just 10 common mistakes, you can be in the successful 10%. So in this video, I want to walk through the top 10 mistakes new traders usually make so you can avoid them. I'm pretty sure that if you avoid these mistakes, you have a higher chance of becoming profitable. So let's get started. The first mistake that most new traders make when they're starting to learn how to trade is not educating themselves before beginning to trade live. Most new traders want to start by opening accounts and placing trades right away. But you need to understand that you need to acquire some knowledge of how the market works first. There are many things that you need to know before placing a trade, like understanding technical and fundamental analysis, risk management, psychology, and other stuff. If you don't take time to learn these trading details, you're just gonna be gambling and relying on your luck when you first start trading. So since we are not gamblers and want to professionally trade, the best thing to do is to look for knowledge in trading by reading books like Trading the Zone, for example, and looking for legit courses from mentors who seem trustworthy and other traders who really understand that trading is hard and it takes a lot of discipline. Also, as I said, you shouldn't be jumping into live trading. So what you can do is open a paper trading account so you can get a feeling on how it works to place trades, set your stop losses, and stuff like that. This way, you're going to avoid losing your capital during your learning period. The second thing is that you absolutely need to have a specific detailed trading plan that shows that you have a clear edge in the market. This trading strategy should show exactly what market you trade, or currency pairs if you trade Forex, where you're going to place your stop losses, where you're gonna take profits, and if you use technical indicators, what chart setups you're going to trade, etc. As you can see, you need to be super detailed so you don't need to think about it when you're entering a trade. So if you don't have a proven high probability strategy, you're just gonna be taking like random trades based on your emotions and opinions from other people. And also, once you have your whole plan written down, you need to go back and backtest your strategy over many years of historical data to make sure that it actually produces profit over time. My third point is about proper risk management and position sizing, which a lot of new traders don't pay much attention to. You must use appropriate position sizing on every single trade you enter to make sure that you have effective risk management in place. So that way, you're gonna be protected when you start getting too many losses. Guys, you really need to understand that risk management is the most important job of a trader. Some traders have this brilliant idea to start risking a lot because they think they're gonna double or triple their accounts, but that's actually the fastest way for you to lose your account. And also, the other mistake new traders make is to try to chase losses because they don't even know what they're doing, or they just get bored or start over trading. So that's why you need to understand that the learning phase is just for you to get the most amount of information, so when you have a big account, you're not going to blow it. So to sum it up, you need to have your strategy in place and follow every single detail of that strategy with no exceptions. I always go back to discipline because I understood from the beginning that that's one of the most important criteria of a good trader. It's easy for new traders to get excited after wins, or you get panicked after a series of losses, and easily you forget about the trading plan. But I'll tell you right now that this is going to be one of the hardest parts for you to conquer. You need to absolutely trade your system with a lot of discipline and patience. You have to make sure that you follow your detailed strategy rules on every single trade, including your stop losses, your take profit levels, your trading sizing, and all of the other criteria that you have on your plan book. So don't get greedy after your wins or exit trades too early, or even hold down to losers too long after your losses. You gotta stick to your plan no matter what. Also, patience will play a big role when you're trying to wait for those high probability setups before you enter a trade. Your goal is to get to a place where you're not forcing trades because you're impatient or bored. You learn how to wait for your edge to come to you. Another mistake that I usually see on new traders is to allow emotions like fear, greed, hope, and ego to influence their trades. There are many techniques that I have used over the years to mitigate this problem, which I will also share in other videos about this subject. Your trades need to align perfectly with your strategy and not by objective or opinions, external influences, or emotions. You need to completely ignore news, other people analysis, posts on social media, and even your past losses and wins. And as you start to get more experience trading, you're gonna get to a point where you're gonna be more calm and neutral when you start trading. So the goal is not to get too excited or distraught. Let every trade be an independent probability decision based only on your strategy rules. The mistake number 6 is that many new traders have this unrealistic expectation that they will get instant profitable when they start placing trades. You need to set realistic expectations from the early stage. These expectations need to come from the historical performance of your strategy, your available trading capital, and your current skill level. Training is a lot of hard work and it's like a never-ending learning. You almost never stop journaling and learning with your new mistakes. One thing that I think will make it easier for you guys is to see the potential growth of what you're trying to achieve and try to match that potential growth with the difficulty for you to achieve that. That way, you're always gonna expecting something great to be difficult. I think I'm gonna get tired of saying that, but trading will make you a better person. It will humble you completely. Guys, one thing that you can always expect as a trader is to face losing streaks, have missed trades, and have periods of poor performance. The wins are just a result of you trading based on probability. This will also come with experience, but don't dwell on losses or look for excuses to rationalize poor trades. You're gonna have to be humble enough to admit when you have made mistakes and you're not following your plan. So don't become too emotionally attached to a failing trading strategy. You have to be willing to constantly analyze your process, and you gotta make changes when needed. So what you need to do is journal and review your trades regularly and identify mistakes you need to fix. That way, you're gonna continually evolve your edge. So now let's get to one of the most important areas as well, which is not taken seriously for a lot of new traders, which is the discipline and self-control. If you don't have these two qualities one time or another, you will start hurting your performance. So right away, you need to start working on developing new positive habits. Like I said, self-control and a strong mindset. You need to understand that there's a big correlation between your training performance with your overall health lifestyle. In trading, you work with your brain like an athlete. So you need to have a routine that will help you to perform at the top level. So you need to focus on getting proper sleep, nutrition, exercise, and work-life balance, because that will help you to get more focus and a stronger mindset. And after you start getting more exposure to the markets, you see that being emotionally stable or undisciplined will start to show on your trading results. Not having a detailed track of your performance statistics is also a big mistake. You have to keep track of all of your trades so you can identify weaknesses and mistakes in your process. So some important metrics that you need to track include things like winning loss rate, risk reward ratio, the number of trades you have taken, the percentage of successful trades, the number of break-even trades, etc. So if you're consistently checking these statistics, that will help you to pinpoint problems and help you to make necessary fixes to optimize your edge. Statistics don't lie, so use them to your advantage. And last but not least, developing a strong trading psychology is just as important as having a solid trading strategy. So as you're working on learning how to trade, you also need to be working on cultivating critical mental traits like discipline, patience, focus, accountability, humility, and other stuff. We all make mistakes in our trading journey, and even more so in the beginning. But the sooner you stop repeating costly psychological mistakes and try to solve these problems, the faster you'll be able to master trading. Like I said, this is a lifelong process, but it's well worth it. So in summary guys, if you avoid these 10 common mistakes, it will give you a significant advantage over other retail traders who struggle. So take your time to study these mistakes in detail and be brutally honest in evaluating your own weaknesses. I believe that if you actually take the time to review all of these topics, you're gonna become a better and profitable trader. So your first start was by investing your time into watching this video. So I hope it provides you with immense value on your journey to become a skilled, consistent, profitable trader. So I'll see you guys next time. Peace.